Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting on the 4-hour time frame with the most bullish scenario where we're looking for a double 1-2 and aiming for a very big wave 3 towards the upside, where we want to see volume increase as price is moving towards the upside. Your first wave 2 retraced to the 05618 Fibonacci, taken from the low to the high of 1, which is a common target for a wave 2, and the second wave 2, which is preferably finished at the low over here, retraced to the 0.382 to 0.5 area, taken from the low to the high of the blue wave 1, which is a less common target but a good target for wave 2 nonetheless. Now, as mentioned, preferably this is your low, as now your blue wave 2 here is shorter in time compared to your green wave 2, which is preferred, as this low was made before the 1-to-1 fib time, taken from the start to the end of the green wave 2 to the end of the blue wave 1. In this scenario, your invalidation is price moving to the downside and taking out the low at 66.2k. On the lower time frame, we are then looking for an impulse to the upside in a wave 1, a 3-wave corrective structure in 2, preferably finished here at the low 67k, and now impulsive continuation to the upside in a wave 3. Common target for your wave 2 is the 618 to the 786 area, taken from the low to the high of wave 1 with the normal Fibonacci tool. Usually a minimum target for wave 3 is the 1.618 trend-based fib extension, taken from the low to the high of 1 to the low of wave 2, which is sitting at 72.5k. However, a wave 3 can easily extend to much higher prices. The second bullish scenario on the 4-hour time frame is an impulse to the upside in a wave 1, 2, 3, sideways 4, and then a wave 5 towards the upside. In this scenario, your wave 3 is already finished and you're looking to finish a wave 4, after which you then want to see continuation to the upside. Preferably, however, in this scenario, this is not the end of your wave 4. Preferably it is the low of your wave 4, but not the end of the range in a wave 4. Let me explain. The low over here got very close to the high of your wave 1, which would be an invalidation, as a wave 1 and a wave 4 are not allowed to overlap. However, this low is made before the 1-to-1 fib time, taken from the start to the end of 2 to the end of wave 3, and a wave 4 is most commonly longer in time than a wave 2, so preferably it ends after the 1-to-1 and not before the 1-to-1. That is something that I've taken into account when going into the lower time frames analyzing this range for a potential wave 4 coming up next. The target area for your wave 5 is between the 1.236 and the 0.618 trend-based fib extension. The 1.236 is a Fibonacci taken from the high to the low of wave 4 at 73.3k, and the 0.618 is a trend-based fib extension taken from the low of 1 to the high of 3 to the low of wave 4 at 75.8k. Because wave 1 and wave 3 are quite similar in price, it opens the door for a potential extension in wave 5, where then the target for your wave 5 is the 1.618 trend-based fib extension taken from the low of wave 1 to the high of wave 3 to the low of your wave 4 with a target of 91.3k. If we then zoom into this wave 4 and look at scenarios that can continue this range sideways, we look at either a WXY or a triangle. In a WXY, we have a 3-wave corrective structure in a wave W, looking for a bigger 3-wave corrective structure in a wave X, and then another move to the downside in a wave Y. Because wave W in this scenario is a zigzag to the downside, wave Y can only be a flat structure or a triangle. However, a flat is most common for a wave Y compared to it being a triangle. Looking at the yellow count, we're looking for a triangle: 3-wave A, 3-wave B, a 3-wave C, and then eventually now a 3-wave D towards the upside. The invalidation is price moving above wave B at 70.6k. Currently, we are also at resistance, the blue box here, sitting between 69.3k and 69.7k. After wave D, we then want to see a 3-wave corrective structure to the downside in a wave E, not going below the low of this wave C here at 67k. When wave E is finished, we want to see impulsive continuation to the upside for a wave 5, as a triangle A, B, C, D, E cannot appear in a wave 2, only in a wave 4 in an impulsive structure 1, 2, 3, 4, 5. If we then finally look at the bearish scenario, then we are looking for a diagonal to the downside. 3-wave structure in 1, 3-wave structure in 2, looking for a 3-wave move to the downside in wave 3, where the most common target for 3 is between the 786 and the 886 trend-based subextension, taken from the high to the low of 1 to the high of this wave 2, giving you a target area between 66.1k and 65.5k. Preferably, the move towards the downside stays above the 1-to-1 at 64.9k, as that would reduce the probabilities for this leading diagonal. After wave 3, we then want to see a zigzag family structure to the upside in wave 4, one more leg to the downside in 5, to then finish a bigger wave A or a wave 1. When that is finished, we're going to be looking for a bigger 3-wave corrective structure to the upside in B or 2, and then another move to the downside in either a wave 3 or a wave C. The invalidation for this scenario is price moving towards the upside and taking the high of wave 2 at 70.6k. If we then finally look at the CVD divergences, then zooming out, you can see there is pretty much CVD divergences with every low. Higher low in price, lower low on the CVD. More locally, as price has been moving to the upside from the low, as also spoken about on the live stream earlier today, we have a higher low in price, lower low on the CVD. Also here again, higher low in price, lower low on the CVD, and it just continued as price has been moving towards the upside. Now that price is continuing to push with a bit of volume, we have to wait for a new range to form to reanalyze the CVD divergences. If we then finally look at the probabilities of the different scenarios, then on the 4-hour time frame, the probabilities remain bullish, and they only turn bearish if price moves towards the downside, hits 65.5k before taking out the high here at 72k. Looking for either continuation of this range in a wave 4 or continuation to the upside for a wave 3. By all means, as long as price is pumping on the lower time frames, moving to the upside with volume increasing, we have to wait for a range to form to reassess the local probabilities for a continuation in a wave 3 or a continuation of the range in either a WXY or a triangle ABCDE. Now, as the weekend is coming up, we only have one more day left. Friday is coming. Preferably, if you do move up in an impulsive wave 3, you do that tomorrow on Friday. If by the end of the day we are still in this range, the probabilities increase for a bigger WXY here, or the triangle in a wave A, B, C, D, and eventually a wave E to finish and continuation to the upside. The only bullish alternative that then brings you over the weekend would be another wave 1, 2, 3, 4, 5 weekend corrective structure and a pump to the upside to create a bigger 1, 2, 1, 2, 1, 2 and another 1, 2. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.